this is creating an opportunity for long-term investors to actually get into some of the businesses which were always an expensive valuation, but now they are probably getting into a very reasonable valuation kind of a zone. So I think, as we say that for investors, volatility is a friend, and this is the time to actually capitalize that.
While Sachin, you say that, you can capitalize on the opportunities, and especially from the safer counters, the ones which have really shown their might time and again, and it's the time to accumulate those at these lower levels. But what are the no-go areas? Because some of the companies, business dynamics can change forever if this war continues. And on the other hand, some of the sectors which could also see a trajectory change. Any on top of your list?
No, I wouldn't. I wouldn't like to say anything of that sort at this point in time, because every sector, every business will find its own way as long as they have the the standing power, to ride this uncertain times. So as long as you are investing in businesses which have shown resilience in the past, particularly with their management track record and particularly with their balance sheet strength. So I think that's how we are evaluating more bottoms up rather than trying to say that this is something that we would like to avoid. So because we have seen that this kind of times, they don't last too long, and once we are sorted with it, generally most of these businesses tend to, and particularly stock prices tend to bounce back very strongly.
That's right. So overall view on for most of the experts, Sachin, has been that India will really bounce back, considering that geopolitical tensions really de-escalate, or, at least the dust settles. But Sachin, if we look at the metal prices the way they are, how would you play that particular space right now?
Yeah, so clearly, if you see the metals as a sector has been in an uptrend for almost now maybe 12 to 15 months. If you see the entire calendar year 25, metal has been hugely outperforming, and these are very deep cyclical sectors. So once they are in an uptrend, they tend to do very well, and once they get into a downtrend, they also have that kind of a similar kind of a downturn. So I think it's about and every investor, the kind of the appetite that they have to play or to invest in this kind of deep cyclicals. So it depends on every profile of the investor, I would like to think.
Right. And about oil and gas, how would you differentiate between upstream and oil marketing companies, OMCs, and what would be the differentiated play in that, considering the situation really impacts this sector a lot?
No, again, over there, see, as far as Indian oil and gas companies are concerned, I think they all have a very strong moat as far as the distribution is concerned, as far as the refinings are concerned. So I'm not saying that any material changes are going to happen because of this event out here. Yes, there may be some short-term knee-jerk reactions, but structurally, I'm not worried at all. India overall demand continues to grow every year in the range of 3-4% for oil and gas products. So I think that continues. I don't see any changes out there.
Right. So no change over there, and a lot depends on the timeline of the kind of volatility that we are going to see. A lot of equity market trades are also on wait and watch. The fundraising situation has also been impacted of the companies where they can use the equity currency to raise funds at the current moment. So it has a larger impact. What would you suggest to the investors in terms of how they should stagger their cash deployment in this market at the current level, and how slow or fast could that, or cautious approach could that be?
Yeah, I think that's a very fair point, because we don't know how long can this actually last. It may be a few weeks to a few months, right? And hopefully not longer than that. But yeah, so I think clearly an SIP kind of a route, or maybe investing 20-30% at every tranche of maybe 3-4% kind of downside in the stock prices or companies that one likes. So yes, it's a good thing to actually spread out your investments over the next few weeks, because you might get even a better opportunity thanks to the volatility, or sometimes just to capitulation of the markets. So that's one thing that one can plan. But I think more important is where you are investing. And I think that's something is going to be very critical, because one needs to stick to really very blue chip kind of companies which can withstand this kind of the blue chip kind of companies which can withstand this kind of the management skills.
All right. So cherry picking at this particular moment, and also
Blue chip kind of companies which can withstand this kind of the challenges in the external environment, and obviously that's a function of their balance sheet and their management skills.
all right. So cherry picking at this particular moment, and also invest in a staggered manner and in the companies with the proven track record, which are really falling the most. Some of those important points coming in. Sachin Shah, always a pleasure speaking to you. Thank you so much for your perspective on the market. Thank you. All right, moving on then, we are still discussing how the Middle East tension has been impacting various companies. Let me focus the attention on one such company, Vishnu Chemicals. Siddharth